This is just a little bit going into kind of our strategy and what we try to target. We only focused on stabilized assets, so we don't do any new development. We don't do any extremely distressed properties. We want to be able to go in, purchase an asset that is producing cash flow from day one. We don't want to go any period of time where cash flow isn't being generated, and we're not looking at putting any more money into the property other than what we've already set aside to put into the property after we've made our initial investment. We're really cash flow and yield focused. We look at long-term holds, putting long-term fixed debt in place to essentially mitigate any interest rate risk, and in general, any timing risk. In general, humans, we all know that we're just bad at timing things. And to set up a strategy where I need to buy something and I have to sell it in 2 or 3 years, that might work and you might be able to make a lot of money doing that, but there's also a higher risk that something may happen in that period of time. So when we look at purchasing a property, we want to be okay with owning that property for extended period of time or even forever. We're probably never going to own anything forever, but we want to be comfortable holding on to that asset in case there are any economic conditions that aren't a good condition to sell or exit the property. We focus on value add real estate as well as core plus. Core plus is essentially newer but not brand new assets when we use leverage. So we're looking at very late 90s, early 2000s properties. And one of the reasons why we've switched to doing a lot of core plus versus just value add is essentially so many of the value add properties have been so popular in the past several years, and the difference in cap rates between a value add project and a core plus project, a newer project, they've come closer and closer. And so when we can make the same return on a 2004 built property versus a property that was built in the 70s with significant deferred maintenance, we're going to go for that nicer, higher valued property versus an older property that may have problems. We still do value add projects, but they're just harder to find that are truly value add, just because so much of the inventory in the market has already been purchased and renovated, essentially.